Yo, investing family, back at it once again. Your favorite entrepreneur, your boy, official Tyree Samuels, right? Now, today, we're actually going to be picking back up where we left off from yesterday. So if you didn't get a chance, definitely go tap into the video that we spoke on yesterday going over Forex risk management. But today, we're going to be talking about risk to reward ratio, right? What if you were able to learn how to lose more trades than you win and still be profitable? Okay, now if you think that this is a whole lot of BS and it's not true, well, I definitely want you to make sure you stick around for the next clip so I can show you guys exactly how to be able to make that a possibility. And I'll see you guys soon. Peace. Yo, everybody, back at it once again. Favorite entrepreneur, your boy, official Tyree Samuels. Right now, before y'all go any further, right? Don't be shy. Go ahead and hit that subscribe button because I want you guys to stay up to date every single notification that gets dropped so that you guys know every single time a new video is uploaded, and I want you guys to be the first ones to see it. Now, as I spoke on in the earlier clip, definitely make sure I go tap into the risk management for Forex video that I actually dropped the other day. But today, we're going to be following up with the risk to reward, okay? So the risk management, to recap, I actually went over teaching you guys exactly how much you want to be leveraging as far as how much money you want to be leveraging on each individual trade in order to be able to make sure you don't wipe your account just by taking a couple L's. Now, what I'm going to show you guys is the logic that was uncommon to me before I came into the space, right? What if I were to tell you that you can actually lose more than you win and still be a profitable, highly successful trader, okay? Now, initially, whenever you hear that, it sounds like cap, right? Sounds like a lie. Sounds like it can't be true. Like, Tyree, what do you mean? In every aspect of life, losing more than I win usually results in me losing, right? If I'm playing team sports, okay? If I lose more games than I win, probably not going to go to the championship game. Might not even go to the playoffs, okay? Right? If I'm swinging a baseball bat and I strike out more times than I hit the ball, relative to the situation, probably not, going to have the best batting average if I'm, consistently striking out. So we're going to talk about today is risk to reward ratio. I'm going to teach you guys how you can make up for all of your losses with individual trades, right? Me on average, I usually can overcome 3 L's with 1 W, okay? That means 3 consecutive losses. Not that I want to or not that I have that all the time, but in the event that you have a bad week, bad day, bad month, right? You want to be able to always make up for that with individual trades, right? You don't want to have to lose 5 trades and then go win 5 trades. You want to lose 5 trades and maybe make it all back with 1 or 2. So what you guys are looking at currently on the screen is going to be an example of a risk to reward ratio that I have set up. This is a real trade I'm currently in, okay? And I'm going to teach you guys how this actually is broken down. So the first thing that you guys need to be able to learn how to do is Trading View. You need to learn how to use Trading View. So please go tap into the video on how to use Trading View. I actually made a YouTube video for that as well. But the first thing I want to be able to talk about is going to be called the long and short position tool. So if you guys look at this side panel on Trading View, some of you are on the desktop, right? You're going to look for this right here. And if you hover over it, the first one should say either prediction and measurement tools, or it should say long or short position. I'm actually going to click that arrow. Okay. Now, the 2 things we want to be able to focus on is long position and short position. Okay. Now, this is what I want you guys to be able to remember. A long position is for a buy, meaning we want the market to go up. A short position is for a sell, meaning we want the market to go down. Okay. Now, with this long and short position tool, this is how we're going to be able to factor in our risk to reward ratio. Now, what exactly does that mean? I'm going to give you guys an example. Okay. Let's say, for instance, this has nothing to do with trading. This is just in general common logic. Okay. Say, for instance, I'm putting up $10. Okay. I'm at the casino. I'm betting my homeboy because I think, the Lakers are going to win this year because they got Russell Westbrook with LeBron and Anthony Davis, whatever, right? Risk to reward ratio is based off of, regardless of the dollar amount you're leveraging, how much can I make back off of that? It doesn't matter if I'm risking 10, 100, 1,000, a million. How much can I flip that? Can it be double? Can it be triple? Can it be quadruple? Right? So say, for instance, you're dealing with a 1 to 2 risk to reward ratio. So your R&R is a 1 to 2. What does that mean? That means if I'm leveraging $10, right, I would simply multiply that by the number 2 and that would give me what I could potentially make back, okay? So if it's a 1 to 2 risk to reward, that means I can make back 2 times the amount of what I'm leveraging, right? So if I'm leveraging $10, I can make back 20. If I'm leveraging 100, right, I can make back 200, right? If I'm leveraging 1,000, okay, I can make back 2,000. It's all the same concept, okay? So that's going to be your risk to reward, right? So guess what? If the risk to reward was a 1 to 3, that means that I can make back 3 times the amount of what I'm leveraging. So if I'm leveraging $10, I can make back 30. If I'm leveraging $100, I can make back 300. If I'm leveraging 1,000, I can make back 3,000, okay? Now, I want you to think about this, okay? Let's do some simple math, right? Think about, if you go back and watch my risk management video, you need to be consistently risking the same amount. So if you're risking $10 on this trade, then you're risking $20 on that trade, then you're risking $40 on this trade, then you're risking $100, it's never going to even out, okay? So this only works if you're consistently risking the same amount. So if you go take a trade and risk $10 and win, and then you're like, okay, I won, I'm gonna go put more money on the next one. Then you go leverage $20 on the next trade and you lose. Now you're gonna end up being upside down because now you're leveraging 2 different amounts. So you can't make up for the loss because the initial risk is different. So say for instance, if I lost, right, a $10 trade, okay? Actually, no. Let's say we won our first trade. Our first trade was an R&R of a 1 to 3, okay? And I was leveraging $10, which means what? My $10 times the number 3 equals 30. I'm currently up $30, okay? Now, I lose the next trade, okay? So this is a win, right? This is a win, right? This is a loss. So how much did I lose? $10. So now my balance is equal to 20 bucks right now, okay? Because I had 30, I lost $10, I'm back to 20, okay? So as of right now, my record is what? 1-1, okay? But I'm still up, right? I'm still up $20, right? Now let's keep going, okay? Now say I lose again, right? I lost another trade, which is what? Another $10, okay? So now my record is 1-2, and my current balance is now $10, okay? Now I want you to think about it though. Think about what I'm showing you guys right now, right? I want you to think about, I won my first trade and I lost the next 2, but I'm still profitable, right? I'm still currently up $10. Now the number as far as a dollar amount is relative. This would be the same thing if it was 1,000, 1,000,000, it's relative. So I'm still profitable, right? Yeah, I would have liked to have kept the 30, but I just lost 2 trades. I only won 1, but I still made money. Now this is where it's really is going to make a big difference, okay? Let's say I lose the 3rd trade, okay? I lose the 3rd trade, okay? I lost another $10, right? Now my record is 1-3, and I either have $0 or I broke even, okay? $0 or break even, it's all the same thing. Now, what exactly does this mean that I'm showing you guys, okay? What exactly does this mean? So what I want you guys to really interpret is, I was able to win 1 trade and then lose the next 3 in a row. I didn't make any money. I didn't lose any money. I'm right back where I started. So whenever people take trades and they're losing and they get emotional, it's because of one of 2 things. You either are over leveraging, okay, or you just don't have enough confidence to know I can make this loss back off of the next trade. But usually it's because you're over leveraging. So I tell people all the time, the reason why traders should not get emotional when they lose is because of exactly what I just showed you, right? If I know I can make up 3 losses with every individual win, I'm not tripping off of individual L's, right? Not at all, okay? So I want you guys to be able to look at this graphic, and I want you guys to be able to take this and apply this to your trading moving forward, okay? Now, as I mentioned before, I am still going to do a video on the lot size calculator so you guys know how to be able to pick your proper lot size so that you can do this effectively. But once you take a screenshot, once you take some notes, this is proper risk to reward ratio. Okay. In my personal opinion, every setup that you take should be a minimum of a 1 to 2 or a 1 to 3, meaning you should always be making back or set yourself up to make back at least double and or triple of whatever your original risk position is. Okay. Now what we're going to dive into is, right, let me go ahead and move this out the way. Now what I want to be able to dive into, guys, is I'm going to teach you guys based off of this setup, how you're going to be able to actually know what the risk to reward is based off the example. So let me show you guys real quick, right? So if we look at this current setup, I want you guys to notice a couple of things, okay? So if we notice, if I hover over this long position tool, right, which all I would do is click long position, throw it on the chart, just like so, okay? Now with this long position tool, you see the green and you see the red. The red is going to tell me the amount of pips I'm risking, and the green is going to tell me the amount of pips that I'm going for. So I'm risking 36 pips to go for 36 pips. Risk to reward ratio is a 1 to 1. What does that mean? That means I'm risking what I could be making. So if I'm risking $10, I can make $10. If I'm risking 20, I can make 20. If I'm risking 100, I can make 100. Okay. Those are not the kind of setups you want to be taking. You do not want to have a setup so where you can only make back what you're risking. You want to always set yourself up to make back more. Okay. So all I did was, whenever I figured out my entry and my final target, I put my long position tool on here. You can actually click on it. You can come to the settings wheel. Okay. And I can actually manually type in the entry. I can manually type in the profit level, which is going to be the take profit. I can manually type in the stop loss. Okay. So as I hover over this, I want you guys to see I'm risking 18 pips. Okay. So I'm gonna go ahead and type that out. I'm risking 18 pips. Okay. Make that red, right? I'm risking 18 pips. Okay. To go for 140. So I'm risking 18 pips to go for 140. Okay. I'll make that green. Now, this is a dynamic I want you guys to be able to focus on. I'm risking 18 to go for 140. Now, you're like, Tyree, I'm not that good at math. If you hover over this long position tool, look at what it says. Risk to reward ratio, 7.81. Okay. Now, whenever I say a 1 to 1, 1 to 2, 1 to 3, there's basically an understood invisible 1. So whatever number it says next to risk to reward, you're just going to act like there's a 1 in front of that. So this would be a 1 to 7.8. If I do this, see how it's a 3.19, it will be a 1 to 3. Okay. Pretty simple. Okay. So this means that whatever I'm risking in this setup, I could potentially make back up to 7, almost 8 times what I am risking. Okay. Now you might be like, okay, where did they even get that number from? Simple math, ladies and gentlemen. Let's pull out the calculator real quick. Okay. If I pull out the calculator, right? If I take the number 140, which is how many pips we're going for, and I divide it by 18, it's going to give me 7.777, which I round to 7.8. So that means these pip counts is how I'm determining how much I could potentially be making. So if I'm risking 10 pips to go for 40, guess what? That's 4 times the amount, because 4 times 10 is 40. So all of this is really simple math. It's just instead of you having to do this, they already calculated for you. So with that being said, ladies and gentlemen, I want you guys to be able to understand risk to reward ratio is always going to be able to help you out. So guess what? If you're risking $10 on this setup, you can make back almost 70 to 80. If you're risking 100, you can make back 700 to 800. If you're risking 1,000, you can make back 7,000 to 8,000, which also means you can go lose the next 5, 6, 7, 8 trades in a row, and you wouldn't make anything. You wouldn't lose anything either. You would be right at break even. So first things first, if you guys watch this video and you hope this video, right, hopefully this video helped you. Hopefully you learned something new. Hopefully it's going to help you stop blowing your account. Let me get you guys to go ahead and hit that subscribe button, right? Because I know a lot of y'all out here blowing accounts, and I want y'all to stop, because we're not in the best financial times to be blowing any kind of money that we don't have to blow, okay? Next thing I want y'all to do is like, comment, share, because I know you who is watching this video is not the only person that needs to know about risk management, and I need to know about risk to reward ratio, okay? And then 3, make sure one more again, y'all go follow your boy on Instagram at official Tyree Samuels. And as usual, I'm going to see you guys at the top, not from the top, because the bottom is way too crowded. See you when you want to be here. Peace.